Welcome to T.S. Lombard. Since we talked last month, we've had some very important developments. Number one, we've had a dialing down of the tension between the U.S. and China with a telephone call between President Trump and Xi Jinping, the Chinese leader. So our concerns that we're heading headlong into a U.S.-China confrontation have abated, and that's a positive for markets. The other development is clearly the global reflation story, and this has been a big positive, and the markets, particularly in the U.S., have taken it on board. This month we look and raise the question, what is the implication of global reflation for emerging markets? And the way we look at it is we divide emerging markets into three different buckets. The first we call the leading growth candidates, and these are, not surprisingly, all in Asia. So we're talking about China, India, and Southeast Asia. Our judgment here is that they're already growing at about, on average, 6%. It's very difficult for them to increase that much, mostly because of domestic restrictions, internal problems. So global reflation is mostly having the impact of pushing inflation up from a relatively low level. So we're talking about an increase from about 2.5% of these 5 countries to about 3.5%. Our second group we call the turnaround countries. So we're talking about Russia, Brazil, and South Africa. These are countries that are coming out of recession, or in the case of South Africa, stagnation. What we see here is we see a big increase in growth, but we're talking about from negative figures for the 3 countries, an average of negative 1%, to a positive roughly 1%. So a 2% increase, but the overall growth rates are relatively modest. Inflation, meanwhile, is falling in these countries. Our third group of countries comprise Mexico and Turkey, and these countries are heading into slower growth and higher inflation. In the case of Mexico, it's partly because of internal problems, because of the Trump threats to renegotiate NAFTA. In the case of Turkey, it's because of a very clear populist strategy. So when you look at emerging markets, it's very important to differentiate between these 3 groups of countries. The bottom line, we're still optimistic and positive on equities as well as credit. But the outlook in terms of overall risk, we don't think we're out of the danger zone yet with the Trump administration, because our concern is that the White House still is quite dysfunctional. So our overall credit judgment is a negative one. So we're urging caution and indeed urging investors to look country by country.